Good morning, September 10th, Monday, 2012. 1 minute opening bell. Time 9:31 Eastern Time AM and AM Pacific Standard Time at 6:30. How about that? And what do we have here? We have 112,000 shares on Google, so we're starting to see a little bit of volume here on this 1 minute opening bell. As far as Apple goes, we almost got a 500,000 shares on a 2 minute cycle. So we're going to look to see where the high frequency and where the inflated calls are being marked up. There's that $700 call. It's up $3 on that. Here, 705 calls got $1.90. He's at 710. That's in the money. All of which are weekly contracts on this opening week. Lee Bell. And we're up 3.85. We are going to see what will happen at the 20-minute opening bell and how far up that this will hit that wall of resistance. And remember, we're going to see if it can break above 712.50 on this opening bell in this minute video in the price action. 711 is the high. What will we be looking for? As we move forward in this opening bell, we will look to see if there is a sell ratio from the highs back down to the intraday lows and what this sets up for the day. Right now, we have a $2.25 opening bell range. You really can't do anything over here. What we are doing, though, is we have alarms set on that 710 put. Okay, they close at 964, and I'm hitting 670 by 7. I got a 680 by 710. I got people buying off that cross side. But you know what? MMTs, as we say, on that opening bell, we have alarms set below the market here. And what we're looking for is if he can break the series of highs. He's got 22 highs. And if this contract makes that 6.5 low, is where this low ends up. And there's only an 80-cent range. There isn't much you can do other than let the volatility understand. That's a $3 markdown, really, from the close. 650, 750, 850, 950. So that was a wholesale print based on that first resistance level. And we're breaking out to all-time highs here off of that 680 level, which we have over here is that 675 call that's hitting the highs right here. Now, granted, the low was 1235 and the close was 1330. This is what we were looking for to have happen over here. He drops that down, you get hit, then you're selling into the first round of strength. As Apple, like I said, we'll have to get up toward that 680, 750 area. I talked about it all last week. Look at here. It has more of a range in its intraday opening weekly bell that we're in right now on a Monday. So once again, this name here likes to make highs. It likes to pull back. It likes to give people a chance to get in before it continues to make higher highs. That will be the key ingredient. As far as the CMG trade goes, we got a mark down to 324 and he comes in at support level. All right, let's take a look at the price line. It's off to the races. He hit 619. He doesn't want to go lower. This name trades up a lot higher within the broader price ranges as the open weekly price prints happen on Monday morning in first 5 minutes. That's where we're at. And the ranges here, 485, that's an expansion price range. Let it be known. Not only that, we have some alarms set up. We're looking at this Dow is selling off. There is a reversal. There is a Ben Bernanke meeting this week. Everybody's looking for QE3. You have the German court on the 12th. That's going to make a decision. Are those people over there in those other countries doing the right thing, and do they meet their laws? And are they all agreeable or not? Because if they turn out to not be agreeable in an overbought bull market, these markets can have reversals. With price volatility can only be confirmed when you have the upside volatility. We made that 712.81. That's exactly where Mario was talking about. And he put a 640 here on that low print now. And that's on that 710. And I'm going to put a bid out here at 5.6 just to start taking a market because he hit it. He made the 40 highs there. All right, here's the update on the CMG. Right now we're 7 minutes into that opening bell. Let's get back to that price line trade. Once again, you got 19 highs and 1 lows, and you only have 63,000 shares. See, now you're starting to get a little bit of price action, a little bit of movement with the volume in here. Even though we do teach people how to trade low volume, because the whole world doesn't know how to trade low volume. They're still stuck on the old ways that volume used to be calculated. No, there is a mathematical equation to calculating the volume relative to price in the actual movement. We got $5.40. We continue to break higher. So those are our leadership stocks. This name here, it'll pull back some. He had a 326. He dropped it to 323.54. That's that lower print. It's got a 325. You got 38,000 cooking. So that range in this first 30-minute opening bell is going to be the key to your success as far as handling yourself with the market and the emotions that high-frequency trading software computing cycles can create in people. So one of our pre-market focuses in the pre-market is to let people know what the ranges are going to be. And it's machine versus high-frequency machines versus humans. That's what this is about. And the reason why it's live is because this is the truth. And these are the reversals. This is that opening price print in a high-frequency model in an 8-minute process. For those people that are in the market maker school, that's how that works. For investors and traders that want to learn other skills, you're welcome to sign up for any of them. We have many programs. Right now, this is how markets are being made in an opening print and how you square a position and come out of one and how these lows get put in. Look at the put side. The high is 730. He's printing back here based on that reversal. He's printing back to that high, but that range is 90 cents from the low to the high. So basically, when this reverses, that was the same high. It made a higher high now, MMT, but look at that reversal. Just like on Friday, it had a 712 and it had a 500 penny, a $500 reversal. Now, this is the opening bell, and we're 7 minutes into it in live. What I will do is I will go on pause right now, but I will let you, what we're looking for, just like we are live right here, is where these names hit their highs in their bull cycle trends and make another high. But what is that reversal as far as price volatility? Has to be both ways. You have to have it from 708 to 712.81, and you have to have it from 712.81 straight right back down. And let this be a major confirmation about how to trade price volatility and how you day traders can come back and beat these people and understand how to be disciplined on the opening bell and understand where that lower support level is and understand that the put side finally got a $2 markup off of that wholesale bid. That's something you haven't seen in the high frequency model. And once again, for my MMTs that are the market makers in here, you can see that we got 27 lows cooking right now. And you had your 40 highs at reversal, and that the price volatility is confirmed only when this happens. That means that the bull cycle, every time that it does hit the high, this is where the broader exchanges, because of the amount of 52-week highs that we have from the summer bull cycle, they're getting a little bit worn out up there at the top. And we have a lot of data that I mentioned that's going to happen this week. And what we look for is, you never know what part of September or what day or what week it will be, but we do gradually and incrementally, we get these confirmations from that short that this market has not shown, only because of the price exhaustion. This would be day number 2 that this name has hit a high and returned to its reversal cycle trends, as before the pullbacks were very shallow. But now that we're up there at a major series of calendar weekly 52-week highs, That means that the price action is finally going to start trading the way that it should on this side of the market. That's the put side, putting those lows in. It's the first time you've seen it in a number of weeks. Now, one thing about these calls over here, that $700 call, even on the pullback, is still elevated. The low's 1160. Look at this one. We're going to buy the dip on that $700 call. This thing has got 48 lows. One of the things we haven't seen on the call side is how they steal that premium. He just created it, but look at 1050 is the close on that $700 call, and we're masters in these option pit. This is live right now, and I've got 10 minutes and 50 seconds of it. I'm putting that low in, and where that reversal, I got 48 lows and I got 40 highs. What does it mean for the rest of the calendar day? After the first 15-minute opening bell price cycle gets put in, is that you got that 600 penny ratio reversal. Something that this name has always done from its 52-week bull highs to reversals and taken premium out of the call. The call is in the money, and it's a weekly. And I will tell people to put a bid in here at 9.6 should we roll over and make another series of lower lows. And this is in the first 13 minutes of the price opening bell. And not only that, folks, I'm going to go on pause. And this is for my newest MMTs that are going to be market makers. That's why we're going through this very, very, very carefully with you, so that you can get a reality of where markets get bull exhaustions and have to have these reversals. That means that that high frequency model wasn't able to hold the high and keep printing higher highs. That is what the high frequency model can't do. And it's finally showing the evidentiary facts of that. So we continue to watch where the high is on the put and where the low was, where that close was, where that low is at 640. This is at 710. And then there's the 715 that we have that got the low of 950. Now, this is the one that I kept saying, this is the one that makes us the most money, and this is the one that I have our other MMTs buying and selling here. Because you can see the mark down, 1310, 950, but look at the high. It's only 1250. It's printing right there right now. Now, let's see if we break those lower lows, and you're going to hit 14 minutes. And I do apologize if I feel overexcited, but when you're doing something live and you have to have the skills in order to be able to understand where these pricing control, they're called mathematical pricing scripts in high frequency, and you finally get high reversals to support. Now, price volatility increases from the lows back up, just as it went to the high back and making a series of 48 lows, something we haven't had in this name. And that the put side relative to all of this mumbo jumbo over here is still the cheapest side of the market in this name. And that you can see for the very first time on that opening bell, and I've got to have people right over there on monitor, not monitor 2, but speaker 2. They're going to be selling these contracts out up here at these highs. And remember, they're back at the close. They're still cheap. So as we watch what this trend does, I got 60 lows printing. I made a series of lower lows. You have not seen this in the name, and this is truly when high frequency crosses the market, you finally start to get this side of the tape. And I will tell you right here, I'm going to bid, I'm going to cancel all on that $700 call, and I'm going to move this bid down here because it's inflated. I'm going to move this down here to $7.70 right now. We're printing the lows because we have to see that's a 560 range. This is the first time that the call side of this market's been getting whacked. That is another way to confirm that the price volatility will be in play. And it's something that we look for in all of the names. Now, watch these lows back over here on Priceline. And watch your trades on the CMG. What does CMG do? It's negative. He makes that lower low. And we have call contracts that were out here to buy at the lower price that I gave out in pre-market. That's a $350 call, and I'm going to tell MMTs, you got bids, line all bids at 45 pennies as you were instructed and 35 cents. Remember, that Friday's close was 10 cents. This name, CMG, broke out $24 higher, and that premium high is only 90 cents, and we're well below this market to buy that premium. So basically, in the first 17 minutes, you're down 31 handles. That is that opening bell reversal with my MMTs. This is a live market on 9/10 of 2012 on an opening bell. Price volatility confirmation. I make the lows, but then I bounced right now in front of your face almost $3, 300 pennies. That's where the high frequency came in. So he marks it down 300 pennies. It's got a $9.30 range. These contracts peaked there, and at the same time, he puts a low in here at 940 and pops that call, that $700 call. So yes, I got lower bids below the market. Yes, we had bids at 960, and we had some people get hit that have bigger dollar accounts, but the lower dollar accounts, let's let it set up for you. Let's get that true low put in. These need to be sold, but once again, that $700 call is going to be a feature. Now, let's take a look at the 705 call. As 1180 on the high, 690 on the low, 820 by 8.5. Now, that high frequency model just came in $4 off the low. Here's one of our bull trend cycles that hit the 260, dropped down to 257.57, had 28 highs. But guess what? Within that bull trend cycle, you start to see where you get more opening bell 30-minute, 20-minute lows than you do highs. That's another way of gauging high frequency trading and learning where markets begin to change in their price levels at bull exhaustion highs at 21 minutes into the opening bell. And there's bellwether Amazon. Once again, it's about how these bull trends pull back and then come back and fight to break these highs. Because you have to have price volatility, you have to have the shakedown of support, and support back, and then you see if they want to break those highs. But nonetheless, this is a different type of beta stock. We featured it when it was down there at 247 again. It's made our up to our 260 level, and it didn't do it until this morning, but it did it. And we have it. So what I will say over here on this price line, that's at 615 call that got to 1080 here, 1340. Now look at the number, volume only 66 contracts. The way that this name trades MMTs is, once again, we had to get a shakedown. He put in the high of 624.50, and now we have a reversal in play within these bull trend cycles. This one was up 17.55 on Friday. This is what I said in pre-market analysis that we are looking for. So we got 1080, 1340. These premiums in these option pit here trade quite differently than these other type of options. They have a different mathematical spread to them that you need to be trained on. I do not advise people that are watching the video by just watching it to go in and start thinking you know what to do with this stuff. 1340s on the high. MMTs, I'm a buyer for this one at 9.4. 9.4. We're putting the low in at 1080. We know that the low volume in the equity right here, we only have 66 contracts. We got a high, we got a low, we got a $2.60 range down here, and we have a reversal high to support. We have them holding that support level higher than the 619.10. Once again, the truth is before us on this opening bell. We're 23 minutes into it for the MMT Market Maker School. Now, if you're watching the video, which is fine, it's really for those folks. But if you're an investor or a casual trader, or used to be a day trader but has been hacked up in the high frequency model, please contact us, because we're here to support you. And we're here to support your friends and anyone else you know, because we're able to get in here and throw the punches with these folks. And we're able to monitor these price volatilities and where bulls and bears start to take their turns and whatnot. So I just want people to understand that's that support level on the CMG bounce. I just want my new folks to know that we got that 619 and we got that ratio up off of that high. We're at 620.69, and he's coming back in, and these contracts are at 1080. They close at 12. They mark them down They mark them down. So I gave you a bid to buy some contracts for some of the new people here on the price line. As far as the other broader trader management goes, these have already been executed. We're looking for a second entry here on the 710 put based on that reversal. That's how these peaked in price. These made that 940 low when we came up off of 703.51 to the current bid and ask ranges in here for the market makers. You made the highs right here, and now you're reversing. So when you go up and hit resistance, because you got 87 lows on the opening bell print in a 25 minutes, and you've got your range bound in the market maker in the option pit. We're masters at this market. This is where the big money's made, buying at support, selling at resistance in the equities. Read our website carefully. We will select you. If you're willing to help yourself and get in here and go through the training and whatnot, we'll do everything that we can to make sure that you get an equal opportunity within the prices and how the high frequency trading models work versus the older day trading models. And I just want you to know that. And that's why we can do this live. And we're here. We're willing to stand up behind you. And I'm going to conclude a Monday morning at 6:56 a.m. 2012 within a 9/10 September bull 52-week multi-year highs. We're at 12-year where a 12-year bear has been involved in these markets and it's about to get broke. We would really love to see if that can happen, but listen, we know behind the closed doors what goes on. And this is the part where we're willing to stand up behind you and share that with you as you learn how to make markets and take those profits out of there and how these high frequency price ranges are going to work. Whether it's the put side at wholesale, where these turns, where the price volatility from the short to support, from support back up here, how all of this works live. It's a lot to absorb, but we're here. And we'll be live with you. And you'll be in our market maker school, and this is how it's going to work. And we'll stand up behind you and anyone else you know. If they really want to get the help and get in here, you get them over here to us. We're behind you.